DocuSign, those shares sinking, as you probably know by now. After a miss on earnings, analysts also losing confidence as the stock gets hit with multiple downgrades. One investor, though, is not only sticking with it, he is buying more today. You heard me right. He's Kevin O'Leary. He joins us now. Mr. Wonderful, I was very surprised when I heard you were buying more of this. Why?
You know, I look at it from the use case. So let's get the stats after the 24.7% decline on this print. It was brutal, painful, no question about it. It's actually down 80% from its highs in the pandemic. But the product's even more ubiquitous in enterprise and small business than it's ever been. And even today, I've used it 4 times already. And so that doesn't mean it's a great investment. But if I thought that this was going away, that somehow the use of this was only to do with working at home, yeah, I might have said, okay, I'll take my losses and move on. But that's not the case. This is an integral part of any enterprise that decides to start using it. Once you acquire a customer, they don't switch to other services very easily because of the database that you maintain for compliance and for records and for tax records. A lot of people have not thought that through. In addition, another point of value, most sovereign nations now, particularly after the Ukraine incident, this horrific war there, have started to wonder, where's the nexus of my data? For example, the Canadian banks have said all DocuSign and all signed electronic documents must be nexus on their soil. The Irish did the same thing. The Swiss did the same thing. In Luxembourg, the same thing. And DocuSign is able to provide those services nexus to the sovereigns. That's not something a startup can do. Now, there are competitors, Adobe being a significant one, and lots of little guys trying to pick it up. But DocuSign is the Kleenex of this space. And my bet in averaging down, and look, I'm in pain, I get it, but it's no different than a lot of these stocks that are taken out behind the woodshed and basically shot down 80%. But there is a use case for it long term. That's my point.
Of course, but you're not paying up for what it is now. You're willing to pay up for it as an investor for the perceived growth, which the company obviously says is challenged. I mean, their full-year billings guide was horrific. The company itself, the CEO, was on this network today and said, we have to change our model. Cramer, I think it's a bad stock. The company, he says, Jim Cramer does, refuses to acknowledge that things are not as good as we'd like. They pay lip service to their shareholders. What about all that, Kev? I mean, this is a company that admits itself that it needs to, I think I could say fundamentally change. The guy says we need to change our model.
You know, every day I have to make bets, and I actually enjoy it when people tell me things are uninvestable. I've been there before. The same thing with the Chinese stocks. Everybody hated them. Just 6 weeks ago, it's been the best place to be. You have to take bets, and you're not going to be right all the time. But I look at the use case of the enterprise of this, and I say to myself, it's part of the digital economy I'm betting on. Yes, it's volatile. Yes, it's painful. But, you know, I listened to the call, too, and I have to disclose, I was a shareholder in this thing when it was private. I know the management. These people know how to pivot. That's exactly what they're going to have to do. And I don't care, you know, if you're trying to guess, are we going to recession next month or 6 months? Signing documents is not going away. It's what you're going to pay for the platform. Now, maybe I'm wrong, but this is an 18-month bet. I'm looking for double-digit returns on this over the next year and a half.
Okay.
Let's see what happens.
All right, that's fair.
And look, it's in the portfolio.
Entirely fair. We'll see. I mean, that's what this game is. Kevin, I appreciate it very much. Thank you.
Take care.